Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Lufthansa's stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a mid-cap company, 8.3 billion euro market cap. They're trading at $6.92 a share, and they have 1.2 billion shares outstanding. We're going to look at a stock that trades in Germany, so these numbers are in euros. If you want to invest in the company in the US, it trades on the pink sheets, ticker DLAKY, and the US dollar amount is $7.50. Lufthansa is the second largest airline in Europe in terms of passengers carried. The first is the ultra low-cost carrier Ryanair. Lufthansa is Europe's fourth largest in terms of revenue. They're also one of the 5 founding members of Star Alliance, which is the world's largest airline alliance. That was formed in 1997. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Revenue was real low in 2020 and 2021. Due to less traveling from COVID. So they did have negative free cash flow, a big negative in 2020, a small negative in 2021. But then back to normal, 2.7 billion in 2022. It did drop to 900 million in 2023. They invested a lot in CapEx. They bought a lot more aircraft. That's why their free cash flow was lower. And you can tell because they had higher net income and higher revenue. Net income is the profit or loss on the income statement. It's revenue minus expenses. A really big negative in 2020, a smaller negative in 2021, back to positive in 2022 and 2023. Their net income grew 92% from 2022 to 2023, and their net income margin is 14%. They converted 14% of their revenue into net profit. Revenue is the sales for the company, and that grows each year. It almost doubled from 2021 to 2022. It grew 15% into 2023, a solid 35 billion. And they do pay a 4% dividend, so they have to pay out 349 million of dividends, which is a good amount lower than their free cash flow net income, so they have it covered. We estimated 4 years of future free cash flows. We also estimated the terminal value at all cash flows past year 4, that's 14 billion. We discounted those numbers back to today's weighted average cost of capital. We get a value of the company of $12.5 billion. We divide that by 1.2 billion shares. And we get a calculated stock price of $10.46. They're trading at 7. So they're trading at a 34% discount. It's a pretty strong buy according to the model. And I gave them a really high whack, 15%. And the stock still seems pretty undervalued. They don't need to generate that much free cash flow, because you can see it's a lot lower than their 2022 numbers. So even if they generate a moderate number, the stock should go up a good amount. There are 17 companies in the same industry as Lufthansa, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. So all the numbers in this chart are in US dollars. So that's why their numbers look a little different than my Excel file. My Excel file is all in euros. They spend a lot on CapEx, 4.4 billion. United Airlines spends the most at 7.1 billion. Their debt-to-equity ratio is better than the median average. Alaska has the best debt-to-equity ratio. Hawaiian Holdings is the worst. Lufthansa pays the highest dividend, 4.2%. I know a lot of investors like to get their dividend payment. They're one of the few companies on this list that has positive free cash flow. American has the most at 1.4 billion. Delta isn't doing too bad at 1.1 billion. They rank 5th in market cap, slightly behind American, but well behind Delta, the largest airline in the world. Their price to book is really attractive at 0.9. Look at their PE, they're trading at 4 times earnings. That's the best on this list. They're trading at 9 times free cash flow and 0.3 price to sales, which means their revenue is triple their market cap. Let's take a look at their 2023 annual report. They give a nice highlight of their financial figures. Revenue for the year, 35 billion euros, up from 31 billion. That's up 15%. Most of that is traffic revenue. The airline ticket, 30 billion, up 16%. Their adjusted EBITDA is 5 billion. That's up 32%. Adjusted EBIT, 2.7 billion. That's up a lot, 76%. Just regular EBIT, that's up 88%. And the net profit for the year, 1.7 billion. up over 100%. 45 billion of assets. Equity ratio is 21.4%. The calculation for equity ratio is equity over assets. This tells you how much assets were generated by issuing equity as opposed to debt. The lower the ratio, the more debt a company uses to pay for its assets. The higher it is, the closer to 100%, the more assets it financed with stock rather than debt. They are lowering their debt. It was 6.9 billion, now it's 5.7 billion. Airlines tend to pay a lot in pensions, 2.7 billion, that's up 34%. Operating cash flow, 5 billion, down a little bit from last year. They increased that CapEx spend. They increased it by 50%. It's up to 3.6 billion. And the adjusted free cash flow is 1.8 billion. That's down 27%. Their adjusted EBITDA margin is 14%. That's up about 2 points. Their share price is up 4% when compared to 2022. EPS is up 112%. It's 1.4 euros. Dividend per share is 0.3 euros. The number of flights has gone up a lot. It's up 14%, 946,000. 122 million passengers, up 20%. Their load factor is 83%. I think the average airline is 80%. This measures the percent of the plane that's filled. So it's a popular metric in the aviation industry. The cargo load factor is 56%. Like a lot of companies, they're trimming employees to save on expenses. They have 97,000 employees, down 12% from last year. Here's a breakdown of their revenue by segments. Passenger revenue, 28 billion, up 25%. Logistics, that's 3 billion, down 36%. MRO, maintenance, repair, and overhaul, 6.5 billion, up 18%. The best ROCE, return on capital employed, is passenger revenue, 19.4%. Almost all their CapEx spend is in this segment. Very little in logistics and very little in MRO. Even though they're an airline, they do have a division, Lufthansa Technik. It's a really big maintenance, repair, and overhaul service for civilian commercial aircraft. This division has 800 customers worldwide, including OEMs, original equipment manufacturers, aircraft leasing companies, operators of VIP jets, governments, and other airlines. Look how high their share price was in 2019, almost $12. 2 years later, almost cut in half to $6.18, but it's up about 30% from then. It hit $17 at its highest point in 2019, and its lowest point was in 2020, $5.03. And they added a lot of shares from 2020 to 2021. They doubled their shares outstanding. But you can see their market cap didn't really increase much from 2020 to 2021, even though their shares doubled. They mention it right down here. Share prices in 2019 and 2020 adjusted for the effects of the issuance of new shares in connection with the capital increase in September 2021. Here are some analyst recommendations. 11 say it's a buy, 7 a hold, 3 a sell. They have 721 aircraft, and here's a breakdown. The first dozen or so are Airbus. Their most popular aircraft, 185 A320s. They have a bunch of Boeings, 28 Bombardier, 43 Embraer. They have 253 aircraft on order, 42 A350s, 34 Boeing 787, 20 777. A lot more short-haul fleet. The biggest one is the A320neo. Here's the employees by region. 65% in Germany, 26% rest of Europe, 5% APAC, 3% in the Americas, and only 1% in Middle East and Africa. Let's look at the stock on Simply Wall Street. Its last price, €7, 8.3 billion market cap, down 5% in the past week, down 33% in the past year. Let's see what they say about the company. Lufthansa is an aviation company that operates worldwide. It has 3 segments: passenger airlines, logistics, and MRO, maintenance, repair, and overhaul services. The passenger airline segment offers products and services to Lufthansa Airlines, Swiss, Austrian Airlines, Brussels Airlines, and Eurowings. Their logistics segment offers air freight, container management, urgent shipments, and customs clearance services, as well as e-commerce solutions. The MRO segment provides maintenance, repair, and overhaul services for civil commercial aircraft, serving OEMs, aircraft leasing companies, operators of VIP jets, government, armed forces, and other airlines. They also offer corporate payment and billing services, vocational and professional training for cockpit and cabin crew, and IT solutions. It has 721 aircraft. They were founded in 1926, almost 100 years ago, headquartered in Germany. You can see the stock is really up and down, pretty volatile. The peak was in 2018 at 31, but you can see it's come down a lot. In parts of 2021 and 2022, it was in the low fives. It did break through $10 in March 2023, but it came back down. The stock has really been struggling. Simply Wall Street's valuation is 19 euros. They say the stock is 64% undervalued. 17 analysts priced this stock at 9 euros. The free cash flow forecast for 2024 is 1.2 billion, 2025 1.6 billion, 2026 1.7 billion. Their revenue hasn't improved much since 2013. It was 30 billion. It's currently 35 billion. It did drop a lot in 2021, under 10 billion. Of course, that's due to COVID, but it has come back. A nice V shape. Here's their debt since 2013. It peaked in 2021 at 14 billion. It's currently 11.4 billion. And their equity has been lower than their debt for the past few years. Their equity is currently under 10 billion. And they do have a good amount of cash on their balance sheet, 8.3 billion of cash. So it seems like they're well capitalized. They're paying out their next dividend on May 12th. The ex-dividend date is May 7th. So you have to own the stock before May 7th to get the May 12th dividend. They paid a 3% dividend in 2014. It was over 5% in 2019. It's currently 4%. The forecast is for it to be over 6% by 2026. The CEO's salary went from 1.4 million to 1.9 million euros. Total compensation 5.6 million, tenure over 13 years. 70% of the companies held by the general public, 15% by private companies, and 15% by institutions. Kuhn is a full-service aviation company. They're the biggest shareholder at 15%. Then BlackRock, then Vanguard. And you can see the list goes on and on. JP Morgan, Deutsche, the German bank, Credit Suisse. Their employee count was over 116,000 in 2013. It's come down a lot to 80,000. And the ticker trades on the OTC Pink Sheets, Deutsche Börse, and London Stock Exchange. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.